Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about the stock market this week in stocks, ladies and gentlemen. That's right, because everybody keeps hearing about a recession is coming, a recession is coming. I don't know about that because I'm predicting worse than a recession, depression. So how do you invest in stocks? Well, you invest in stocks when times are bad. You pick the stocks that everybody's going to want to buy. You know, like toilet paper, food, fertilizer to grow food, water, Procter and Gamble maybe, Johnson and Johnson maybe. Well, we're going to talk and welcome to Foci Optics. Check. Stop struggling now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. A little bit different today because I'm going to be on screen as we discuss stocks that you want to invest in during a recession, during inflation. They're two separate things. Keep that in mind. And of course, we're going to go over a little bit of history. But please share the videos, help other people. And I always point out the new members. You can see members here on the right hand side. That's if you hit that join button to support the channel. So I want to thank everybody that's a member of the channel. I humbly appreciate it. And so let's get into it, shall we? Now, I want to point out a recession, a Great Depression. And the reason why I'm bringing up this chart is because I want you to see exactly what happened between 1929 and roughly 1933. You saw the stock market at all-time highs, and then you see a stair step down. This may look just similar to the recession of 2020 when we had the pandemic, where there was a cliff drop and then a slow uptick for 6 months to a year. And then all of a sudden, stair step down. This is what I'm referring to. So when we have weeks where the stock market goes up, that's why I say in a recessionary environment, dare be it a Great Depression environment, you have the stair step down. Then all of a sudden you have it going up. You can see that simply. And then it goes up, then it drops, then it goes up, then it drops even a little further, and it just keeps going like this slow milking of your wealth is stolen over the course of months, and it could be years. Now, some of you may be saying, Eric, why are you showing me this? Because we're trying to find out some stocks for the Great Depression. We're going to get into it. I already mentioned, too, Johnson and Johnson from the intro. I mentioned Procter and Gamble as well. I'll mention another one. How about Costco or Sam's Club? How about those? Because why? Those are bulk items there for less. So those stocks, generally, people will start gravitating to where they can buy items for less, even though it's going to be in bulk. So that's why those stocks are also. And then I'm going to actually show you what some of the professionals talk about. Warren Buffett seems to lead the way on a lot of things when it comes to investing. But first and foremost, you have to understand what led to the Great Depression. Fed's decision to raise interest rates in 1928, 1929, you can see right there, ladies and gentlemen. It's that simple. Feds have always increased interest rates, but now they increased it. Why? Because they were doing quantitative easing for the last 12 years. And they're still doing it to this day to prop up what else but the stock market. That's what they've been doing. That's what also led to the Great Depression. That's what you have to understand. Now, the other thing I want you to understand, what else catapulted the United States into the Great Depression? Protectionism, now otherwise known as tariff wars. U.S. tariffs through the 1920s. The same thing. So when you hear some government running officials talking about they want to increase tariffs against the world, that is not good for the United States. That means people, the United States citizens, have to pay more. And that also means if you're outside of the country, then why would you want to ship your stuff to America? Because they're trying to charge you more. It works on both sides of the spectrum. So that's why you're trying to break down the barriers where the tariffs are low. You don't want to increase tariff rates because now you're not going to have money pouring into your country. You guys got to understand this. It's not good for your country to have tariff wars, no matter what country you're in, ladies and gentlemen. So when somebody starts talking about quantitative easing, when somebody starts talking about they want to reduce interest rates to zero, interest rates to near zero, the lower they go, the more people can borrow, which now means that's money that is not in the coffers, which now leads you to have a higher and an increasing debt. And America is over $30 trillion in debt, just so you understand what's going on here. An IOU for everything. Therefore, you have to have a fluctuation in debt interest rates, because the higher the interest rate, the more you're going to owe on that debt. So keep that in mind. How do you start a recession? Increase interest rates after you have allowed people to borrow for 10, 12 years. Yeah, everything's going to be stalled out, ladies and gentlemen. So let's get into it, shall we? Look at here. When we start talking about this is 2009, ladies and gentlemen, up until 2022, this is the Dow Jones. Look at this. This is incredible. Everybody was going, oh, my IRA, my 401k, it's been going great. Some people act like it just started in 2016. It started in 2009, ladies and gentlemen, and it's been running now until 2022. Here's the peak, 2022 February. Now we're starting our stair step down, as I call it, and the Federal Reserve and everybody else in banking and Wall Street, they're trying to stop this from happening. Unfortunately, it will not stop. They're all sitting here giving you their recession predictions. Again, keep in mind, Gino Scimiente and myself, we're predicting something worse than a recession. We're going further. We're going to Great Depression depths. That's what we believe. I believe it. I don't know what you believe, but please let me know down below in the comments. Do you think this is just going to be another recession like it was 1989, like it's 1980? What kind of recession do you think this is going to be? A 2008, 2009 recession or something worse? All of this from 2009 up until even right now, they've been propping up the market because of free money, interest rates are low, and allowing loans for Wall Street bankers, hedge funds, those type of organizations, low interest loans, meaning if you had a loan for everything you borrowed and it was less than 1%, I think you would be doing very well and you would be able to buy up whatever you want. All right, let's just keep it real. So that gives you an idea of where we're at and how high and how big of a balloon that the stock market actually has been for the last 12 years plus. So what does Warren Buffett talk about? I'm just going to go over a few things. This is his strategy on investing when there's high inflation. Why? Notice American Express is something that he's invested in the past whenever inflation has crept up. This also will apply to Visa, MasterCard, because people are going to be using more of their credit cards when there's a recession or when there's inflation and items cost more. People today go to their credit cards. Therefore, you're going to be charged more money, which now means these companies are going to make more profit. So he talks about AXP for everybody on podcast. AXP, that's American Express. But there's Visa, there's MasterCard, there's other companies that are out as well. So that is very interesting. Coca-Cola, KO. That's right, Coca-Cola, KO, which now means, begs the question, these give dividends, by the way. Okay, American Express, even though they're minor, it's good to invest in those. Visa, Coca-Cola is next on his list. KO, that also means Pepsi should be on the list. Correct? That's right, correct. Apple is on his list, and Coca-Cola gives dividends as well. Apple gives dividends as well. They're on the list. You guys have heard me talking about Apple, AAPL. You've heard me talk about them for the last 3 years, 4 years, that you should be handling and investing in Apple. Now's a great time. Their stock prices dropped. He calls Chevron, CVX, which is an oil company. Now remember, this is during inflation. All right, there's separate things that we're going to go back and forth on. This is regarding when there's inflation. CVX. Why not XOM, which is Exxon? They give dividends as well. You guys already know in the March of 2020, we were talking about Exxon, XOM, when you could get almost 10% return on your money. And it was only in the 30 some dollar range. And now they're upwards around 80, 90, maybe even $100 is XOM. It's up there. In less than 2 years, you would have done 100% on your money. I'm just saying, because we can't win them all, because there has been some losers. You know, like I'm saying, like the cannabis stock, SNDL, for instance. Figured that would be long term. It has dropped as well. So I'm just saying, we can't win them all. And that's why sometimes you have to invest in ETFs, index funds. So you saw by this chart here, index funds, no matter which index fund you were going to invest in, you pretty much were going to be a winner, a big winner over the last 10 years. Created lots of people wealthy. So after this recession, this is a lesson to learn. This is what's going to happen after a recession. So once there's a recession or a depressionary situation with Wall Street and things drop dramatically, that's why you need to start buying stocks, because then you'll have this huge explosion. Because what are they going to do? They're going to start reducing interest rates. They're going to start doing quantitative easing again to help everybody out. And so therefore they're going to put their money in. And this will apply to crypto as well. All right. So I'm just giving you the Buffett strategy for 4. Now let's get into something else. Here's recession stocks. I just left it open across this web page. You can see Dollar Tree, Dollar General. Yes, even though these have increased pretty much 50 to 75% year over year, what happens during a recession is that, now we're talking recession, what happens during a recession is the prices, people need to buy items that are cheap. So where are you going to go? You're going to go to Dollar Tree. You're going to go to Dollar General, right? That's where people are going to go. That's where they've been going for the last 2 years. American Tower, Procter and Gamble, as you heard about, Diageo, all right, DG. That's Dollar General. Diageo, I believe, is DEO. That's their stock symbol. All right. Dollar General is D as in David G. Procter and Gamble is PG. All right. General Mills, the cereal company. They own more than cereals, ladies and gentlemen. Just keep that in mind. Clorox. They own more than just bleach, ladies and gentlemen. Hormel Foods. Once again, Pepsi over here on the right-hand side. Remember, I told you if there's going to be Coke, you might as well think Pepsi if you're partial to either one. Costco, of course they're here, and that also means Sam's Club should be there as well. Defense always starts putting in more money for defense. So here's Lockheed Martin, which also means may think about Raytheon, may think about other defense stocks. Phillips International is here. Church and Dwight, notice the Arm & Hammer lock. Kroger, these are grocery stores, right? So I'm just giving you an idea. During a recession, these are some stocks that you need to think about investing in. You can Google recession stocks and this will come up, just so you know, make it easy for you. All right. And this, I don't know why I went on here, but here's inflation stocks. So you guys know we've talked about Alcoa, right? NUE stocks, right? Freeport McMoran. You guys can go do a little research. How about that? Because whenever you invest, you should do your own due diligence. But we're just giving you the track record for the 100 years of the stock market. Ups and downs of a recession, a Great Depression, and a Great Recession. These are tried and true stocks that people have invested in. And notice we're talking about gold and silver during inflationary times. But unlike previous times, there's things called crypto out now that people normally would have put into gold and silver. So those prices would have increased dramatically if there weren't trillions of dollars put into crypto. That would have been put into the gold and silver market, which would have increased prices dramatically. So all that money was taken off the table. $1 trillion lost in the crypto market. That's right. When the crypto market got wiped out by 90%, there you have it. That's a problem. That money's gone forever. That can't be invested into anything else. So just keep all of that in mind, why gold, silver, and precious metals have kept their prices pretty much just stable as far as I'm concerned. A lot of you may not know, but about 3.5 years ago, we did a silver stacker challenge where who thought it was going to go below a certain price, whether it was $13 or $12, I can't really remember. But the winner was going to get 10 ounces of silver. Well, the winner received 10 ounces of silver and it cost $13.50 3.5 years ago. All right, just keep that in mind. Silver now is only $21. It hasn't gone 100%. It pretty much has basically stayed not even level with inflation. Not true inflation, because, or actually it has, I'm sorry, don't get me wrong, because I'm starting to think in my head. 20% year over year for the last 2 years. All right, that's the housing market. To me, that's what inflation really is also. 15 to 20% 2 years. So from $13.50, and we'll round up to $14, 20% is around $2.80. So that'd be $3 each year, right? $3, $4, so that's $7. So we would have made the $20. So when you take out the extra year, and let's say it was 10%, then it should be 23, 24, 25. Then when you do a half a year, we should be at 27, 28. For some reason, silver's around $21 an ounce. So clearly it should be near 30. Nowhere near if we're just going off inflation numbers. By rights, though, you would have had a demand. So now the demand would have increased at what? Another 20%, another 30, another 40%. But see, it's being manipulated. So I'm just letting you know that is actually what's going on here. Now, let's get into some other recession stocks. Different perspective. And I'm going to use 10 recession-proof stocks to buy and hold. This is a list that's pretty good. And look at the list. Let me start the methodology of it. And the reason why they're using this is because they also went by, guess who? Wall Street, the hedge funds. How many hedge funds are buying these particular stocks? During a recession, they're all calling for one. So this is what they're picking up right now. So when you sit there and say, hey, how come the stock market keeps doing these ups and downs? It's because of this right here. Hedge funds who are holding billions of dollars, all of a sudden they go and buy a couple of million shares of a particular stock during a recession. And then that's what this is correlated with. That's what the hedge funds are doing. So now you can see for yourself. Here's one, something that's not on most people's radar. This is why I picked these here, because this isn't on everybody's radar. B as in boy, T as in Tom, I. That's the British American Tobacco PLC International. 18 hedge funds are holding this or buying it, all right, a couple months ago. Diageo, D as in David, E-O. There they are. 19 of these hedge funds are holding these. PLC Unilever, which is also UL. 23 hedge funds. UL, ladies and gentlemen, just to keep it simple, because they have brands that you use and didn't even know. All right? Just keep in mind, 23, that's very, very powerful. All right. Tractor Supply, TSCO. T as in Tom, S as in Sam, CO. Recession proof stock. Just keep all of these in mind. Write them down. Pay attention because you got some studying to do. Bunge Limited, which is B as in boy, G as in George. 38 hedge funds. It's in food and agriculture business. You guys know we talked about this a couple of years ago. That's right. If you're in the SSN Nation, you knew about BG a couple of years ago. We were talking about it then. How funny is that? All right. So once again, you guys were always in the know and you didn't even know it. But I digress. So we have the last things that I wanted to show was some more stocks, very simply, that are just listed. Remember that Exxon, XOM? Remember Procter & Gamble, the KO, the Pepsi? But Phillips Morris. This is during inflation as well, which is P as in Paul, M. Then you have PLD stock, EOG stock, PXD because of the natural resources and storage units, ladies and gentlemen. During a recession, people move. They have to store items. So what are they going to do? They're going to get that storage unit. So it may not just be public storage. There's other storages. U-Haul is also out there. There's a lot of other storage. Extra space, maybe that's good. There's a bunch of storage companies. So think about it. And what's even better is companies that have joined forces, have merged together, and you don't realize they merged together as a storage company. Do your own research, ladies and gentlemen. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why we have to talk about when things are bad, when things are good. We still have to make moves, ladies and gentlemen. You just can't sit idle because that's not the way capitalism works. That's not the way economies work. There's ups and downs and there's levers. And when certain levers happen, then you have to change up and make some different moves. Please let me know what you think down below. Because in the meantime, keep your head up, keep moving, and I'm out.